In this week's episode, we put the spotlight back on the Zambian maize market with less than ideal production conditions hampering their season. The question is whether Zambia will have to import maize this season and what impact it can have on prices within the region. All in this week's episode, so make sure to stay tuned. Hello, Dr. Johnny van der Merwe here, and a warm welcome to another episode of the African Agri Overview, thanks to the support of Zimmatic irrigation systems and Comdi grain trading. Zimmatic's pivots and lateral move systems are truly cutting edge, combining top-notch components, exclusive designs and innovative features for a reliable, long-lasting agri solution. Looking firstly at the Zambian poultry market, we have seen day-old broiler prices trading on 16.5 kwachas per head, while day-old layers stayed on 20 kwachas. Layer cull prices also increased to about 70 kwachas, while live broilers increased to 102 kwachas per head. We also saw the average egg price increasing to 61 kwachas per tray. We have seen the kwacha also strengthening significantly, which can put pressure on these prices. But with that, let's jump straight into the latest news on the grain markets.
Welcome to all our viewers. This week we look at the Zambian maize market. Zambia is normally an important supplier to the region. However, now speculation, they might even need to import during the next 12 months due to the El Nino impact. So, the question is, how big or small the 2024 harvest could be? Late plantings and the dry conditions from mid-January to late February in the central and southern region had a significant negative impact on yield potential. First half March saw rainfall improve in the central region, but the south remained relatively dry. The last 2 weeks have been drier again. The northern region had good rains and favorable growing conditions throughout the growing season. Market crop forecasts vary significantly, but most between 2 and 2.8 million tons versus last year's 3.2 million tons, as indicated in our scenario analysis. With the crop well developed, further rain unlikely to have a significant positive impact on yield potential, but rather a consolidating effect. We feel a 2 million ton crop forecast rather conservative and are more comfortable with a forecast between 2.5 and 2.8 million tons, especially if one considers the substantial increase in rain-fed and irrigation planting area. Government seems concerned about the maize balance sheet and already talking of 200,000 tons of imports for strategic reserves, probably from Tanzania. Therefore, we cannot see government lifting the export ban on both maize and maize meal during the next 12 months. Zambia normally uses around 2.5 to 2.7 million tons of maize annually, which includes maize milled for maize meal exports. If the export ban continues, the loss of the DRC maize meal export market could see the 2024-25 maize usage down by at least 500,000 tons, similar to the 2023-24 year, where the ban also played a part. If one further considers carry-in stocks of 300 to 400,000 tons and healthy expected early deliveries, mainly irrigation, and talk of at least 200,000 tons, the supply concerns may be overemphasized and the import need probably small, if at all. Also, Tanzania produced a bumper crop during 2023 and an even bigger crop expected for 2024. So, if Zambia is short, Tanzania should be able to cover the shortfall. High Zambia prices already attracting Tanzania maize and maize meal inflows. So, the next obvious question is how the above S&D scenario could affect price trends. Concerns regarding crop size and the potential need for imports has seen prices spike higher to levels where Tanzania origin started to flow into Zambia, as indicated above, chasing lucrative prices. Given the concerns regarding Zambian supply next 12 months, we believe import parity, and in particular Tanzania import parity, could play an important role in price determination, even during harvest time. Current Tanzania import parity Lusaka around $330 a ton, see the red line. However, once the next long-range Tanzania crop commences harvesting from June, we guess Tanzania prices will come under pressure and Zambia import parity could dip below $300 a ton. Our Zambia correspondent, Joop Pistorius, will now share his thoughts on potential price movements next few months.
Thank you, Jack. There is panic due to the El Nino effect in southern, western, eastern and central provinces of Zambia that has basically wiped out our grain crops with less than 25% that can be harvested. The opposite is happening in the Copperbelt, northern Luampula and northern side of Mchinga provinces, as well as the southern Tanzania, where there were above normal rainfall and surplus production is expected. Early maize from Tanzania has started coming in at 13% moisture levels at Nakonde border. With Zambia prices higher than Tanzania prices, the flow of maize will be towards Lusaka and the Copperbelt. If government can provide easy passage of grains from the border areas to the mills and processors without interference, big volumes will flow into Zambia. The Zambian maize price should come down from now until end of harvest in August this year to below $300 per metric ton landed prices in Lusaka. At the levels Jack has indicated, Zambia can attract up to 300,000 metric tons Tanzanian maize that is grown cross-border using the same cultivars and planting methods as Zambia, which are free of pests and viruses. The biggest challenge will be transport and funding all the maize until there is available logistics to move it. With government support, private sector initiative on maize movement will help to make Zambia food secure for the 2024 season. Joop Pistorius at Nakonde border, Zambia.
Thanks Joop for sharing your in-depth local knowledge. Next week we will discuss the Kenya maize market, where supply, both local and imports, has exceeded expectations of late. Remember, quality information improves decision making. Contact us for more detailed, tailored information.
Thank you, Jock. A huge shout out to our sponsors, Zimmatic Irrigation Systems and Comdi Grain Trading, for making these videos possible. Comdi is a seasoned grain trading expert in South Africa's dynamic marketplace with years of experience and a reputation for excellence. Comdi leads the way in connecting markets and facilitating grain trading across Africa and beyond. Comdi, your trusted partner in South African grain trading. If you would like to advertise on these videos, make sure to contact me on the details displayed on screen. I'm Dr. Johnny van der Merwe. Thank you for watching, and remember to tune in next week for more on the African grain markets.